Good morning. Welcome to GrainTV. It's Tuesday, December 6th. Last night saw more red paint on the grain boards. Logan, what did we see?
Yeah, Kevin, we saw really continued follow-through selling into the night session. We saw corn down 9, wheat down 6 in Chicago, 7 in Kansas City. Soybeans sold off further, down 3 in the overnight session.
Yeah, soybeans in particular set off a really negative chart formation last night called a bearish reversal. This is when the market trades higher, has a positive open, but then ends the day below the previous day's range. That is negative, and chartists are going to look at that as a negative sell signal right now. I got to believe that the market continues on this downward spiral that it's on.
Yeah, Kevin, taking a quick here look at corn, I really think it's kind of the same situation over there. We've been talking about this head and shoulders forming in the corn market recently. In the overnight session, we actually broke the neckline of this head and shoulders formation around the 586 level, but it was done on relatively light volume. Producers out there need to be watching the trade today. If we close below 586 with conviction, I'm looking to get sold. Where do we go from here? I'm looking for a level of resistance around 555.
Exactly. Hey, we're going to take a break. When we come back, we'll take a look at wheat and what the market's doing. Welcome back to GrainTV. Logan, we're seeing the markets open this morning lower again.
Yeah, looking here at the fire tip platform, Kevin, we see corn really continue the selling from the overnight session, down 8. See soybeans hanging in there, down 1. Kansas City wheat down 8, Chicago wheat down 8.5.
You know, wheat continues to be taken to the task for its negative fundamentals. There's 3 reasons that I continue to believe this market's going to just sink lower. Global competition, that's something we've been talking about and everyone's been talking about. We're losing business to the Black Sea region as they have ramped up their export business. That's not going to discontinue anytime soon. Secondly, we're seeing world stocks continue to grow. They're the highest they've been in 10 years and higher than they were 2 years ago when we started this long-term rally. The third thing that I know a lot of bulls are going to point to as a reason to hold on to wheat is the fact that we're in a La Nina. Yes, that tends to lead to typical drought conditions in the southern plains, but this year our friends at Planalytics, who are weather analysts, tell us that the La Nina is different, that there is better chances for moisture, there is better chances for ample snow cover in the plains areas that have been going through drought.
Yeah, Kevin, well right now it really looks like the fundamentals and the technicals are really in alignment right now with this wheat market. Take a look at this chart here. This is going back to May. We made our highs around then where it really looked like domestic wheat. It was going to be a short crop. It ended up being a short crop, but kind of the X factor there was the supply of wheat on the global market. That's kind of trumped the domestic issue that we saw here. We've seen wheat trade lower. If we take a look here, even going back further, we're looking for a level of support around 610. Right now we're trading around 635. Kind of the same situation as corn. If I'm a producer of wheat, I'm going to be watching the market closely today. If we close below that 610, it's not shaping up well here for the wheat market.
And I got to believe with stock levels at the world the way they are, I got to think that the last time we saw those types of stocks, we were at $4 wheat, not $6 wheat. So $6 is still probably a pretty good price.
With that wraps up our show for today. Thanks for joining us here on GrainTV, and have a great rest of your Tuesday.